Good morning, everyone, or good morning, Washington. Good afternoon, Brussels. Welcome back to the virtual Peterson Institute for International Economics. I'm Adam Posen, the Institute's president, and it is our privilege today at a historic moment for the world economy, but also for European integration and policy, to be speaking today with the European Commissioner for Economy, Paolo Gentiloni. We're grateful to the Commissioner for making time. We've had the good fortune of interacting with him and with his predecessors in that function and working closely with what's called ECFIN, the Department of European Civil Servants on the economic and financial side who work for the Commissioner. Commissioner Gentiloni, of course, is a public servant from Italy and Europe of long standing, including as Prime Minister of Italy from December 2016 to June 2018. He also previously served as Italy's Minister of Foreign Affairs from 2014 to 2016 and as Minister of Communications, and that he has come into this role in the European governance structures at this time is another example of the call to Europe, the integration of Italy into European leadership, and the importance that we all place rightly on what happens in Brussels and the capitals of Europe. The Commissioner has chosen the title for today of Preventing the Great Fragmentation, Europe's Response to the COVID-19 Economic Shock. In the fragmentation, as I understand it, that they are discussing is, obviously, this is a common and symmetric shock to Europe and to all humans, that we have the pandemic, we all face the same biology and simultaneously roughly the same economic concerns, but the incidence of the disease and the economic severity of the shock will be asymmetric and could have fragmented European politics as well as economics. The EU has clearly stepped up in recent weeks. Commissioner, could I ask you to expand on what you think Europe has done to prevent this great fragmentation and what you think it means for both the European economic outlook, but also the functioning of European economic policy going forward? I'm trying to unmute you, Commissioner. For some reason, it's not working. Could you unmute? Thank you.
Yes. Good morning, and thank you very much for this opportunity. And thank you for also this question that could maybe have an answer framing a little bit what is for me this great fragmentation risk and what was done from European institutions and member states, obviously. It is, I think, very interesting to note that it was a very quick reaction. The first initiatives were taken middle of March. It's 75 days from now. And they were three important decisions at the time. One was the decision of the ECB to decide to deliver on this pandemic purchase program, which, by the way, has been strengthened a few hours ago. As you know, the ECB added 600 billion to the 750 previous billion of this pandemic program. And it is a very important decision. And then we had two other decisions coming from the Commission at the time. One was the suspension of the Stability and Growth Pact, which is our fiscal surveillance rules. And the second was the suspension of the traditional state aid rules. These two decisions were, in a certain sense, enabling European member states to deploy their fiscal power, forgetting for the moment the limits, the rules, the thresholds, the state aid limitation. And this happened, so member states decided discretionary expenditures for around 4% of European GDP, and this is perhaps to be increased from the decision announced yesterday by Germany, and around 24% of GDP on guarantees and tax postponement. So a very strong initiative from member states. But at the same time, this initiative increased the risk. I am not blaming these initiatives, but they increased the risk of differences among member states, of problems in the level playing field of our single market, and of fragmentation, especially among member states of the euro area, sharing the same currency. We have several examples of this. We frequently mention the example of the request received by the Commission of state aid with new rules. And these requests were for a total of 2.3 trillion of euros, and more or less half, I think 48% of this request were coming from only one member state, which is Germany. So in other words, I would say that enabling member states to spend, all of them, the member states with large fiscal space and others with very limited fiscal space, all were allowed to spend to face this unprecedented crisis and its economic and social consequences. At the same time, member states were allowed to intervene in companies in difficulty and not following the rules that we normally have for state aid and state intervention. But this made clearer than ever the importance of having common fiscal tools to avoid this fragmentation, to rebalance the situation, and to exclude the possibility of a symmetric crisis finishing with winners and losers, finishing with someone in very good shape and others in very bad shape, or at least mitigating this. This was the general target of all the measures that we took at EU level. We had, as you probably know, a first package of around 500 billion euros in 3 different decisions coming from our ministers of finance in 3 different tools, one targeted to short-time work schemes, the second to healthcare system, and the third to small and medium enterprises. But then, after this important initiatives of 500 billion of loans provided by these 3 tools coming from 3 different institutions, EIB, ESM, and the Commission for the short-term work, we proposed as a Commission exactly 8 days ago this recovery plan that we call the Next Generation EU plan. The plan is, from my point of view, really impressive. I am not discussing only of the macroeconomic importance, which is there because we are talking about 750 billion euros, but it is very important, and I would say perhaps even more important, the decision that it is the Commission that will go to the markets, borrowing these 750 billion euros, and either distributing them through grants or a smaller part through loans for those member states that are interested in loans because of their relatively higher interest rates. And this is, I stress this fact, as I already told to Adam Posen, really unprecedented. And perhaps it is a step in a really strategic direction, which is the direction to have in EU not only a common monetary policy, which is already there at least for 19 member states, but to have also the beginning of a real common fiscal policy. And this is a potential game changer. I remember very well in the last 2 or 3 years, the presidents of the ECB stressing the fact that, yes, monetary policy have a big role, and today's decision of the ECB are confirming this, but if they are not joined also by at least a starting of a common fiscal policy, this is perhaps not sufficient to avoid fragmentation and differences in our European family. So in 75 days, I think something happened that was completely impossible to predict only 4 or 5 months ago, if we think to the discussion and the divisions that we had in the last 10 years. But in fact, it was perfectly necessary if we consider how deep is the recession we are facing and how symmetric is the origin of this deep recession.
Thank you, Commissioner. As you say, this is a potential game changer. In our conversation, you mentioned that it may be misleading or exaggerating to talk about a Hamiltonian moment, as our colleague Jacob Kierkegaard and others have spoken of, but it clearly is a shift. And we at Peterson had agreed with the analytical thrust behind former President Draghi and current ECB President Lagarde's calls for fiscal progress. The old trope is that Europe proceeds through crisis, and certainly so far this crisis is proceeding much better in that sense than the previous crisis. I guess where I would like to start our Q&A, and please everyone who's online as an invited participant, use the Q&A tool in Zoom to post a question that we can post to the Commissioner. I guess how much is this structure set up to be this emergency response with the COVID response purpose versus how much the creation of a European fiscal power, let's call it, going to outlast this crisis? I mean, what do you see this being used for in future? Is it only going to be an emergency fund when there are similar common symmetric shocks, or is it something that may be an ongoing facility? Where do you want it to go?
Well, I think that there is a inevitable ambiguity in my answer to this question, because I think from one side it is clear that this is a temporary decision. It is a fund that is targeted to a special mission to face this crisis, and that will have a few years, 3-5 years of deployment. So the first part of the answer is it's a temporary decision. But at the same time, we know that this is establishing a precedent. It is establishing the fact that, yes, the Commission is an institution with a AAA rating, allowed to go in the markets and borrow in case of situations of emergency, in case of need. And we live in a world where emergency and needs are rather frequent. As well, in my personal experience, we saw perhaps 2 or 3 of them. So the tool, the fund is temporary, but the decision will have a lasting effect.
Thank you, Commissioner. I have a first question from Olivier Blanchard that it's likely to take some time to get the recovery plan on the road. By then, COVID spending may actually be less, COVID-directed spending may actually be less relevant. What do you expect the spending to actually be on with this money that's going to the member states? And how optimistic are you that the money will be well spent?
Well, it should be well spent. And I think that the European institutions and the Commission, which is the one borrowing and distributing this fund, will ensure that it will be well spent. What does this mean? I have 2 answers for this. One is, well, the decision is in first phase in the hands of different member states. This is not a program decided here in the Berlaymont Palace and transmitted as a sort of memorandum to be adopted by 27 member states. These plans need to be realized by member states. It's their responsibility, it's their ownership to propose these plans to the Commission. Then the Commission is asked to share and agree with these plans, and this decision will be taken, I think, responding to our priorities. Because what we need, we strongly need, I think, is that these plans are helping not only the resilience of European countries and societies in front of crises like the one we experienced, but also these plans should be strongly oriented to fund the transitions we are in. And so the priorities that we always repeat here in Brussels are the European Green Deal in one side and the digital transition in the other side. But we all know that the 2 or 3 months of lockdown, in fact, have emphasized and strengthened the importance of both these strong challenges. and large priorities. So we will encourage these plans to be oriented to reforms and investments, and to be strictly connected to our priorities, and these two priorities especially.
Thank you. I have a related question, more practical, from Stephen Erlanger of the New York Times. When can Italy, Spain, and other badly affected countries realistically expect money from the recovery fund?
Well, small amount of money, but I would say even minimal amount of money will be available already this year, because some of the smaller tools of this recovery plan will be available already this year. In particularly one which is called React EU, which is more targeted to the impact of COVID-19, but it is perhaps 11 billions this year. And then we have reinforced through cohesion funds, other tools for this year. But the real answer is the funding will begin with the new multi-annual budget of the Commission, because the fund and the borrowing in the market are connected to the multi-annual budget of the Commission, and this budget will be in place from January the 1st next year. But we are encouraging member states to propose their national recovery plan already in autumn, despite the fact that financing will begin next spring, because this dialogue, I think, should begin as soon as possible. So we ask them to make their proposals already in autumn, so to have a dialogue with the Commission and to make possible the first disbursement in next spring.
Thank you. I have a question from Jean Pisani Ferry of Peterson Institute in Bruegel. So it partly relates to what you were just saying, Commissioner. The EU budget has traditionally and recurrently had a certain amount of rigidity and a certain amount of politicization from the main actors. I mean, are there any thoughts to making the budget processes more flexible and to insulate some of the allocation of funds from the state level veto players putting pressure on the system?
Well, in such a I would say bold move and decision from the Commission and from the President of the Commission, I don't think it would have been wise also to have a proposal completely changing the cards on the table on the multi-annual budget. I'm not saying that I'm not sharing this necessity, but the political assessment that we made was, okay, we are proposing something really unprecedented. At the same time, we don't want to completely reopen the discussion, which is already difficult among member states on the multi-annual budget. Only two remarks. One, we introduced, in fact, in our proposal, because the proposal has not yet has to be approved by the Council. we introduced a larger amount of flexibility in the budget. So a certain amount of money that can be moved from one chapter to another to face evolution of the situation, emergencies, etc. Second remark is that I deem personally very important the fact that despite the difficulties of this budget and his design, which is coming from long time, having this recovery fund and plan connected to the budget is, from my point of view, politically very important for Europe. It would have been different, maybe useful at the same time, but different to create a new intergovernmental fund, a sort of new ESM, so to say, to face the COVID-19 consequences. Because here we are embedding this borrowing in the markets, in the through the Commission, in the budget of the Commission. And this is really a game changer, much more, from my point of view, than establishing a new intergovernmental fund.
Thank you. That's a very important distinction you're making. We have a question from Bjorn Erik Orskog of Norges Bank Investment Management, which goes directly to what you were just saying as it happens. Should we understand the EU debt to be joint and several, or will it rather be just several? Some have suggested Germany's on board with it being a several debt, but not joint. So it's in the EU budget, but is the debt truly common?
Well, the debt will be paid back in a long period. It is in our proposal, the repayment is beginning in 2028 and lasting until 2058. So it's not perpetual, but it's long maturity in paying back. For sure, this will also will enhance the discussion on what here we call the union own resources, which is can we fund the union not only through contribution of member states that are now the majority of the funding of the union, can we fund the union also at a larger extent from now with new own resources, form of European taxation? Well, my personal answer is definitely yes. We can and we should. By the way, I am the commissioner in charge of taxation, and
that's why we asked.
Yes, I have not to say this too much because it's not so popular. But in fact, we are not taxing directly citizens. We are talking of several possible own resources coming from new mechanisms, and these mechanisms are connected either to global issues, the one we are discussing now in OECD, digital taxation, minimal taxation, or, and very promisingly from my point of view, they are connected to the green transition. I think from these two avenues, the two big things discussed in the OECD global discussion and the energy, carbon border, environmental taxation, I think the Commission could have in the next years a stronger part of own resources. And this obviously would strengthen the decision we are taking to have a common debt, to issue a common debt as a Commission. It is not the member states that have asked to repay this debt. This is also to be clear.
Okay, so thank you. Our Peterson colleague, Jacob Kierkegaard, follows up on this point, or already had this, but it happens to follow up, which is, you're in his calculations and understanding of your reports, you've got expanded ETS, border adjustment, taxes on multinational corporations, and digital taxes. So the first point is, how much does this become a permanent revenue stream to the Commission? And is it solely tied to this particular debt issue, not issue concept, the issuance of this line of 30-year debt? And second, are all these different taxes and revenue sources really aligned with the green agenda the way you want it to be? I mean, it seems like there's some tension there with ETS, but maybe you can speak to that.
Yes, well, first of all, in my view, they should be strongly connected to our Green Deal strategy. Despite the fact that timing obviously should take in account also in these very weeks, very months, the consequences of that we are experiencing in some sectors from the lockdowns. But apart from this emergency of a few months, I think that the coherence of these resources with our Green Deal strategy is essential. Second, in my opinion, this effort on own resources is very important to strengthen the European project. I am not looking to this effort because it is necessary to pay the debt that we will have borrowing in financial markets, because the burden of this debt will be very limited with the interest rates that we have now, and it could be near to a very, very minimal amount of money yearly. This is not the main motivation of increasing our own resources. Increasing our own resources has to do with, I think, two strategic necessity. One is that the European project cannot be only connected to member states' contribution, because this is important, but if it is exclusive or almost exclusive, it is a limitation for this project. And second, because we need these new initiatives for substantial reasons. We need a minimal corporate tax in Europe because we can't have a single market with aggressive tax planning inside the single market. We need a mechanism. It will not be easy to design it. A mechanism to strengthen our path towards cleaner industries, avoiding a unfair competition against our industries because they are very faster in greening. So we need a carbon border adjustment of something. So sorry to be a little long in this answer, but my point is that definitely we need this new taxation. We need own resources, but not for the main motivation that is the repaying of the debt that we will have with this new fund. This will be a side effect, but the real motivation is maybe much more important than this.
Thank you. No, I appreciate your being full in your answer, because this is obviously a critical point for the green agenda for the future of the European project in general. Now, as Commissioner for Economy, you and your colleagues in DG ECFIN do a certain amount of surveillance and advice on a country by member state basis. And as you mentioned, the SGP and certain forms of surveillance are sort of pulled up, but clearly you also mentioned the idea of the various countries presenting their recovery plans this fall for consultation, review, comment. So on that regard, I want to pull up a question by Angel Bide of Citadel that the German government seems to have taken some very aggressive and, for its standards, atypical moves in terms of spending, including the just announced VAT cut. How much do you think the German model of what they're doing in terms of demand management now is applicable for other countries like Italy, France, Spain? Especially since it is emphasizing short-term demand management. We have countries that are going to have larger output gaps, obviously, than, and you had mentioned, or your team has mentioned, that you've changed the estimates of the output gaps realistically as best you can, given the crisis. So just, sorry, to my turn, I've gone on too long, but just to say, in your role as surveillance and advisor to national governments, what do you think of the German plan? What do you think of its elements as applicable to the rest of
Europe? Well, according to the presentation we received of this plan that was announced yesterday, I think it is very positive for at least two reasons. The first one is that it is a strong and impressive stimulus from the German side, and we insisted in perhaps 5-6 years. In the last 5 or 6 years, I was not there, but the Commission insisted in the last 5 or 6 years, asking countries with fiscal space, and Germany first of all, to spend, to invest, to modernize, to use this fiscal space. And so this is the first reason we are judging very positively the plan. But it is not only this, it is also, from my point of view, the fact that the connection with the digital and green targets is, at first view, very strong. And I think that this is also encouraging all member states to connect their recovery plan to these strategic priorities. So I think it's good for the fiscal stance that we always were suggesting, but it's good also for a content that is strictly connected to our green and digital transition.
Thank you, Commissioner. Just to follow up on that, I have questions from Douglas Redeker of International Capital Strategies and from Nicholas Veron of Peterson as well as Bruegel on this topic of how you sort of adjust the SGP going forward, whether formally or informally, in implementation terms. How do you get back from where you are now and the debts that will be incurred for thinking through those evaluations? And more broadly, what, as the other member states do submit their plans and do proceed with their plans, what kind of conditionality, if any, and what kind of evaluation do you see both your group at DG ECFIN and the Commission more generally exercising over these plans? Forgive me if I'm asking you to repeat some things, but I think this is a point in which you need to be very clear what you think is going to happen here in terms of conditionality or not in this realm.
Yes, well, we are still in a situation where it is we call it a general escape clause, so a suspensive clause of the Stability and Growth Pact is in place. We activated this clause at the end of March, and this influenced already our recommendation to all countries in the last, in the 2 or 3 weeks ago. How long this general escape clause will last? Well, this depends on the evolution of the crisis. We have no precedent. It's the first time that this general escape clause is activated. It was introduced in 2014, I think. So after the previous financial crisis, exactly having in mind the possibility of a general situation of difficulty for all member states. And this will last until this general situation of crisis will last. So it's a political decision. At a certain time, we will decide that the severe downturn of the European economy as a whole, I am quoting the regulation, is no more there, but for the moment it is for sure there. So we are in this suspensive situation. This creates the fact that in our spring country recommendations, we took note of the fact that every single member state is not respecting our fiscal thresholds. We don't have European member states respecting the 3% to deficit rule, and member states are augmenting their debt to GDP ratio. This happens in a moment where it's a little bit paradoxical, but it is true. We had just began a discussion on the review of the rules of this Stability and Growth Pact. But this review began before the outbreak in January. And we were supposed to conclude this review in autumn, proposing some slight change or strong change to our rules. Is this exercise completely lost because of the situation? I don't think so. I think that at the very beginning of this exercise of the review of the Stability and Growth Pact, before the COVID-19 crisis, we were discussing on two things. One was the possible simplification of this mechanism of surveillance that is very complicated. And second, the possibility to create a easier way to public investment to be deployed. I think that these two issues are perfectly true also, and will be perfectly true also after the crisis. So we will perhaps delay, or for sure we will delay the timing of this review, but when we will take in our hands again this review, these two problems will be stronger than before. Just one mention to investment, for example. In ECFIN estimation, which were at the basis of the assessment of needs for the recovery plan. So it was a very solid basis for the proposal. We estimate a loss of 842 billion of euros investment in 2020 and 2021 cumulated. And more than 90% of this loss is private investment in our estimates. So we need to avoid what frequently happens, that after a shortage of private investment, there is also a shortage of public investment. And so we will have, I think, stronger than before, the need to facilitate public investment, especially public investment connected to the green transition.
Thank you very much, Commissioner. Now, you've been very responsive to the questions, and of course, it shows how well you know your brief in your area. I'm going to ask you to go a bit further afield. We're obviously still relevant to the work as Commissioner for Economy, which is the international aspect. We all are hopeful for the green agenda for Europe, and therefore as a means to the green agenda for the world. Obviously, we need a greater global emphasis on the climate change issue. But we're getting pushback from the US, from some other countries. From your perspective, from your piece of the puzzle, how do you see these green measures being put in place and the public investment being put in place working vis-a-vis the rest of the world? If Europe is out in front on these matters, are there going to be protectionist actions back and forth? You've talked about the need for border adjustments to not put European business at a disadvantage. What do you think happens on this front?
Well, I would say first that we should avoid any idea of the fact that this crisis brings to postpone the Green Deal European commitment. And I know that this is a position that can be also shared by part of our citizens, and it is easy, unfortunately, to distribute propaganda on the fact that this is not the moment to think to the next decades. It's a moment to think to the next weeks, to survive, etc., etc. And I fully respect the social difficulties that are behind these kind of reactions. But if we are responsible politicians, I think that we should keep these priorities also because paradoxically, these 2 or 3 terrible months of people dying, people suffering, and of lockdowns brought us also lessons on the potentiality for a different way of living, different way of transportation, different ways of working. And we should not lose this opportunity. So first of all, we need to confirm this as a priority. Second, we need to try at least to relaunch the process at a global level, because, well, Europe is responsible only for a rather limited amount of emissions, and you can't have a Green Deal in a country alone or only in Europe. This has to do with the pressure of the public opinion, the pressure of United Nations and Sustainable Development Goals, and also the attitude of the global players. I have seen some moments of multilateralism coming back in these difficult months, and this is absolutely positive and important. For example, all the commitment in supporting IMF, in suspending the debt service for lower income countries, good decisions from the G20, etc., etc. But unfortunately, I am also seeing the opposite. So the risk of having new trade tensions and less commitment on the green transition. So this, in the post-COVID-19 world, will be a decisive challenge. Will we go to strengthen multilateralism, or will this crisis make nationalism stronger? In my experience in Europe, and also in the country I know best, which is Italy, at the moment, the positions of strong man, of I am solving everything on my own, I am against EU, etc., are weaker than before, not stronger than before. But this is what happens now in the beginning of June. We have to consider what will happen in next autumn with the social consequences of this crisis deploying their effects. And so we have to be very active, I think, on this.
Thank you. And just to say, in one plug that I must make, the Peterson Institute is committed to supporting Europe and the world on that journey to progress on dealing with decarbonization and multilateral efforts. To abet that, Gian Pisani Ferri and I are leading a new project here, and we're hoping to contribute to your effort. A final question, if I may, Commissioner. You've been very generous with your time and with your answers. And again, on the international front, in part because of your own experience as Prime Minister and Foreign Minister of Italy, it seems a shame not to ask you this, but it's also, of course, a European issue. You mentioned the G20's welcome efforts regarding the resources for the IMF, the World Bank, efforts for postponement or restructuring, well, not yet restructuring, but at least standstills on debt repayments in the official sector for poor countries. What do you see potentially happening in terms of governance of international debt and governance of the international financial institutions coming out of this situation? I mean, clearly there's been an issue with Europe writ large, some of the member states being unwilling to reallocate shares. Clearly there's been issues with the US being unwilling to allocate resources, although in the crisis, we seem to have done a little better on that. I realize this is not your remit as commissioner, but as an experienced policymaker in these areas, how much of the same spirit you were talking about with respect to the way European public feels now about the green agenda, how much do you think that spirit can also be channeled towards debt relief or governance reform in the international financial system?
Well, I think it's absolutely needed. It was frankly not obvious that a minimal decision to suspend the debt service of 77 poorer countries, it was reached after a complicated negotiations among main creditors. And now I think that something like 40 of these 77 have already made the agreement, the necessary agreement, but it's a very initial move for sure. And now restructuring is of essence, especially in some countries, and the discussion is going on. We took some good decision even in this difficult time. Yesterday I mentioned to my colleagues in the conference call of the G7 finance minister that the European Union was providing finance assistance, for example, to Ukraine or Jordan, in deciding it in these very days during the coronavirus pandemic. And I think this is 1.3 billion for Ukraine is something, not only a message for in finance assistance in cooperation with IMF, obviously. So here it's the challenge, but the challenge is also in re-strengthening and avoiding a stalemate in WTO, because we can't win the post-crisis situation if we have a difficulty or a crisis in global and international trade. And finally, I think, but this is a little bit out of my portfolio and our discussion, we will be challenged in the next weeks and months by the consequences of this crisis, especially on two issues. One is how much should we protect our economies, because there is a need of protection coming from this crisis. But from my point of view, this need of protection should not undermine the openness and the competitiveness of the European single market. This will be a very relevant argument for discussion. How much will we protect our value chains? How much will we protect our companies without disrupting the trade, single market competitiveness? And the second will be definitely we will have a stronger role for the government, for public, for the state in our economies at least in the next months and years, and few years. And this is needed and could even be used in a very positive way for public investment for our transitions, but with very clear red lines in Europe about any form of attraction towards these forms of authoritarian capitalism. That is not something coming from very far from Europe, but it is frequently something that is also inside Europe.
Yep.
We are not talking of conditionalities when we are talking of the economic recovery plan, but for sure we have a conditionality, which is the rule of law in the Union.
That is a fantastic note to end on, Commissioner. And that kind of leadership for liberal values from you personally and from Europe is something I think we all need, without sounding too sanctimonious or scared. Obviously, rule of law is a concern that in the US now is more front and center than it has been perhaps at any time in many decades. More broadly, just to remind everyone that the full video and eventual transcript of this will be available on the Peterson Institute website, www.piie.com, as well as the Commission's site, of course, if they choose to post. I would encourage the Commissioner to think about his response to my last question, which I think was fantastic, and talking about these issues of how much state intervention and how much supply chain protection and the international as well as the intra-European aspects is a fantastic topic, which we would love to hear your reflections on again at some future date after more has transpired. We very much value the collaboration with you, your cabinet, with the DG ECFIN, and our colleagues working on economics at the delegation of the European Union here in Washington. Thank you for joining us for that. And we look forward to continued conversation. One last note, you said to be cautious about the Hamiltonian comparisons. I'll just make a comparison to the musical, not the history. I think we're all hopeful that you and the leaders of Europe are not throwing away your shot in this time of crisis. And you've taken a great first step, and we encourage you to keep it going. Thank you.
Thank you. Thank you very much.